Okay, good evening, everybody. Welcome to the special Saturday night edition of the strategy session. Today is January 31st. It is just after 8 p.m. My pick for the game in the Super Bowl is Seattle. I have been wrong the last 5 years, so take that what you will. I'm either due or go against me. But I think...
Well, here's the problem. The problem is my pick is Seattle, too, and my record is worse than yours.
Right, so there you go. So New England is a lock. I love Seattle. I think Marshawn Lynch is, I don't know. I think he's the real deal, and I don't know. Anyway, my favorite prop bet, by the way, is what will be a higher number? Okay, did you see that, Paul? What will be a higher number? Russell Wilson's total yards or the national average for gas? That's a real prop bet. That's not a joke. That's a real prop bet. They were 32nd in passing this year. They're in the Super Bowl, the first team in history to be 32nd in passing, and they're in the...
Dude, but didn't we discuss this? If you go look at his 16 games, they're like 175, 186, 211,
right.
380, 150, 180.
Right. No, I know. It's hysterical. All right, let's go. Earnings coming up this week. 1-800-Flowers. That's always a big mover. All right, so I'm obviously teasing. Exxon is Monday. That's something to watch just for the horrendous oil group. What else? I'm not seeing anything big. There's a lot of earnings, but I'm not seeing a ton. You got Aetna, healthcare. You got LinkedIn this week. Okay. GMCR is not going to really. Guild is coming up. These are not really any big ones. LinkedIn isn't a mover either. I don't think there's any movers. The APC. Okay, Jason. Thank you for that. Wynn Resorts, UPS. I like UPS just because sometimes it gives you a feel for the transports.
And they already pre-announced they think negatively.
What else? I'm looking through here. Last week I picked New England, but I've changed my mind. I just like Seattle. But whatever. Probably Brady's year again. Who knows? I rode him twice when they played at the Giants, and he let me down. CME, yeah, they're not going to move anybody. Yeah, I don't see anything. Paul, do you think anything that's going to move us this week? I don't think so. There's LinkedIn.
I didn't look, but I don't think it's going to be from earnings that are going to move us.
Okay. So there's Cisco. Yes, February 11th. That's 2 weeks. And BB, do they report, you said, this week? Yes, they report on Thursday. That is our rock and rolling January effect stock. One of few that we got right this year. January effect was definitely a disappointment this year. Well, we should just lie and say we killed it, but... yeah, I don't know about that. All right, so how about...
if you just say, every stock went as high as X, right. So you should have got out of the highs because, everyone gets out of the highs.
Right, that's what we should say, too. We should go, it went as high as this, and you should have known to get out right there. Okay? Anyway. All right, so... Monday, Spanish unemployment, ISM manufacturing. Obviously a 3 a.m. number, but it could contribute to the gap. 10 a.m. is during the market, so we got to watch that. We got factory orders Tuesday. Wednesday, ADP non-farm employment. That's rated a red now, so we want to watch that. We got ISM non-manufacturing, that's Wednesday. Trade balance, 8:30, and then the weekly unemployment claims. I get a lot of questions of this. These unemployment claims are weekly. They're every, okay, I'll get to that in a second. And then Friday, non-farm employment change, unemployment rate. All right, that is the job reports. Okay, the job reports, and then Lockhart is speaking. Now, Spanish unemployment change is red because it's expected to have an effect on the euro. Okay, in the European whatever it is, the group in Europe. That's why. Okay, that's why it's red. It's not going to be a U.S. I mean, it may have U.S. effect on the gap, but that's really probably about it. But it may move Europe. Okay, so my quick opinion on the market, and then I'm going to turn it over to Paul, is I do not like that we are out of this triangle here on the SPY. Okay, we do have the 200-day moving average coming up. We do have now 1, 2 triple bottom here. Triple bottoms do not usually hold. I expect us to go through this. I don't know if we're going to break through the 200-day moving average or not, but we are seeing relative weakness in the market. I'm not going to use this spike high for the fib. Okay, if we go through the 200, the 50% retracement is 195.46. We also have a gap around that area. The Qs, they're trying to break. They broke down out, but they reversed. Okay, and now they reversed again on Friday. They're back outside the triangle. Could I draw the triangle less steep? I could, but no. Why would I? This is an accurate. This is IVV, by the way, so it's kind of the same deal with as the SPY. But I don't know why I would draw it less steep. This is accurate enough. I mean, what? How do you want me to draw it? You could tell me. I mean, I'm not against redoing it, but the only thing I can draw.
More like, dude, it looks more like a diamond than anything than a triangle.
Really? I don't see the diamond. I mean, what are you thinking? This, you mean? Well, you draw it when you get the charts, I guess, because I don't see. I mean, what are you thinking? Like this? That's really lame, but yeah, I guess so. I mean, the top is definitely a diamond. But so you think, and I should draw it like this for the triangle? Yeah, I mean, then the lines aren't really symmetrical; they're not really angled the same. Anyway, it's not really nice. No matter what, it's not really nice looking. If you use my original drawing, it broke down out of the triangle. If not, then yeah, you could say it's technically still in. But I mean, maybe it will. You know, I don't know. It is a triple bottom. I think that if we, Ann, I don't know about Thursday's low. I'm more concerned about this low. I'm more concerned about the December low because it lines up with the 200-day. That's what I'm really concerned about. I'm really concerned if that gives way. That's my opinion, Even the Russell, which tried to hold its triangle, broke down out of it. So anyway, I'm giving it over to Paul. Paul's going to talk till 8:40. I'm going to be back, so he has a half hour. If you have any questions, get them to him. Individual stocks I will handle when he is done. I will see you in 30 minutes.
Okay. I just set up. I am in my bedroom in Vermont.
We.
Right. Just come back to the
I got it, guys.
All right. So I'm actually sitting on the floor. You have a house full of dogs and kids. I woke up this morning, it was 10 below with wind gusts to 50, 45 miles an hour, and they're talking about wind chills 45, 50 below. Look at this picture from my Facebook page. These are all these knuckleheads waiting because all the lifts at the top were closed. All these knuckleheads waited 35 minutes to ski the lower half of the mountain. I've never seen a line like this in powder days, let alone when the wind chill was 45 below. I'm like so floored that people are either hardy or dumb. I mean, when I do it, I say it's hardy, I guess. When everybody else does it, I think it's dumb. So my son and I got all bummed up. We went out, and we. Can you guys see my screen? Can anybody not see my screen? Okay. All right. Good. That's fine. Let's open up. So my son and I, this is my 9-year-old and myself, we went to Manchester. Shopping bag full of stuff. And now I'm done until I'm 60. And I'm not kidding on that. All right. Let's roll. Here, we'll go through the indices and the sectors and then fixed income. We'll do some commodities and finish up with some currencies. We came into last week looking like that. I said for several weeks that this low, that's the low of the Thursday boom, that low is really key for the short-term direction. I thought if we close below that low, we're going to open up a trap door. Nothing really has changed. So last week we traded. I thought on Thursday, frankly, here's Thursday's action all the way to the right. Okay? I thought this day was really constructive. I liked that in the Dow at least. We took out the 2015 lows and we reversed. I would like to see them flush this low, which is the December low, and reverse. That made me feel a little better, but we didn't. So I did a whole bunch of trades on this close. And then what happened the next day, which was Friday, we had a bad day. We're still kind of in the sloppy, so all 5 indices, this, I don't care what, Tiny likes to label it, and he's a lot smarter at it than I am. I don't care about the labels. I just want you to see and agree with me that this is sloppy. We've lost the higher highs and higher lows, and we're not really in lower highs and lower lows yet. It's just a sloppy, looks like a topping pattern, frankly. It looks like, eventually, set this up. Okay. And it looks like eventually that you just look at the pattern, it targets somewhere around there. Excuse me. So is it going to play out that way? I don't know. But price action alone looks really sloppy. Right? There's nothing redeeming yet. I still have an awful lot of longs. So last Wednesday and Friday clearly were a little on the painful side for me. The S&P looks very similar to the Dow. Again, you got a lot of slop and chop. It does not look particularly bullish and healthy in the short term. I would imagine, unless the bulls took off right away this week and get above on the S&P 2080, these last 2 peaks, in a week or 2 weeks, and we're probably taking out the December lows. Will that spur on to really trapdoor selling? It's too early to tell, but at least you have to consider that as, I have to go off the floor now, so give me 1 second. My knees are telling me. So now I'm lying on my bed. And I'm sure you don't care, but I can fall and get my computer set up, right? Okay. So, again, it's not about always being right, although I do want to be right, frankly. But you have to have all the scenarios, the possible scenarios in place. So if we go below the December lows, there's a chance we may get that whoosh slower, to say it politely, or when everyone throws up on themselves and throws in the towel, and you have a 3 to 5% 2-day move. It's possible. I do not think the bull market's over. Okay? The mid-cap spiders, which have gone from laggards to leaders, they're not as bad as down the S&P. It could look a little better. But it's still sloppy in how I slice it. The small caps look toppy again. I mean, we could go on and on. The longer this pattern lasts, of just going sideways and sloppy, my sense is that it'll end up resolving itself to the upside. I think the bears are going to have a window of opportunity shortly to really get moving to the downside. If they can't get moving to the downside, once the window opens, the window will close and the bulls will take off. We'll see some pretty good short squeezes, but I don't think we're anywhere near that scenario yet. Okay, and finally, the Qs, and I'll look for questions. I am long the Qs, and I am long the S&P, as I have been, I think, all year. I mean, the Qs they don't look as bad as the others, at least in my opinion. Yeah, it's still sloppy, but this, so far, is looking like a nice orderly consolidation. So I'm going to hang my hat that the Qs can hold on for the short term. If they don't, I'll lighten up at lower levels. I'll be wrong. It'll hurt for a little while, but I will move on. So in January. Actually, let me just throw up Europe and emerging markets. Europe, believe it or not, Europe has been one of the leaders of the year. So if you can divorce yourself of the news, Europe price action has been better than the United States this year. We've had a really nice rally in Europe this year, in spite of all the horrific news. And emerging markets as well, and really until Friday, they've been a monster. Friday really kicked their teeth pretty good, but they've been a monster. My 3 longs all year, I have not changed them. I'm long EPI, which is India, and I'm still long India, and I still believe that doesn't look so bad. Now, you're right back into support from these 1, 2, 3, 4, 5 tops. You're right back into support, and it still should go higher unless this is the final high of their bull market. We should pull back and then go higher in India. China, I'm still long. Oh, no, China, I'm still long. That got kicked in the teeth pretty good at the end of the week. Definitely in some pain with China in the last couple of days. I'll reevaluate this position probably on Tuesday or Wednesday, but let the early trading shake out. And the Philippines, I'm still long, and that just hit an all-time high on Friday. So that's where we are in emerging markets. Let's see. Uh-oh. My screen is very busy, Henry. Can you guys hear me? No picture. Uh-oh. Oh, audio fine? You may be too far from the mic. Wow. Is this any better? I'm putting the... Wow, it's so bizarre. So half of you say the audio is fine, and the other half say I sound a little distant. It's hard to understand me. My apologies. I don't think I have a solution. Sounds as if you're in the back room. Huh. Let me figure this. A little echo, buzz. Because I'm really close to the laptop. I am Sam says if you log back out and log back in, it may solve the problem that some people are having. I wonder if it's because I brought my little laptop with me, which is an Apple MacBook, as opposed to the Dell that I normally use. I wonder if that's causing a problem. So I'm sorry. I really apologize. Next week I will make sure Okay, is this sound any better right now? People having problems. Does this sound any better? Sounds fine. Okay, this is really strange. Excellent now. Okay. So, just let me just get comfortable again, and we'll continue. Okay. All right, let's see what we got. Sound is okay. Video seems good. Logged out and back. Not much better. Richard, my apologies. Well, I don't know what the deal is, but next week we'll try again when I'll use my other laptop. Maybe it's my Apple computer that doesn't really like go to webinars. All right, so we covered all the indices. Does anybody have any questions on the indices? Jason, I'll get the bonds. We're going to go through sectors next, and then we'll go through bonds. We buy any downside insurance, just waiting into the market to make a move. Jay, to answer your question, kind of candidly, I'm not doing any hedging yet, and that's because my intermediate-term trading model is still positive. So, market could draw down 10%, and I'd be wrong, and the model would be wrong, but I wouldn't do any hedging yet. I want to see how we react to the December lows. Henry, you asked about the head and shoulders. Okay. I mean, I don't believe in, because Edwards and McGee don't believe in head and shoulders on indices. But I see what you're saying, and I see the pattern you're talking about. So even though I don't believe in it, the head and shoulders, I certainly believe it's a sloppy pattern that could lead to them pulling the trap door right here. You got one bottom, two bottoms, three bottoms, the fourth time down. And I agree with Tiny. They normally don't hold. They normally poke below the low as well. So I said it last week. As much as I love this reversal on Thursday, I hated Friday's action. And we probably are going to poke down at least minimum below the December low, if not have a deeper correction. So you have to be on guard for those scenarios. If you have too much risk on the table, then take some off. Let's go to the key sectors. First, transports. If you look at this chart, you would never guess that oil is, essentially $50, and it was down as low as $44. The tranny stopped going up when oil collapsed, and that's disconcerting. And FedEx was the leader, and that's really just stopped totally. We got lower highs, higher lows still, but a sloppy pattern. It's not acting well given that energy's gotten decimated. And UPS pre-announced. I don't think did they pre-announce or they actually announced, but whatever the case, it was awful. This is an awful looking chart for UPS. The airlines still look fine. I think you can buy them in any pullback. They're the bright spot in the trannies. So the trannies, price action looks similar to the indices, but fundamentally, kind of the big picture fundamentals, it stopped going up, is worrisome. So I would not, I'd rate this probably a modest negative. Let's go to banks. So the December, obviously below the December low. So it looks like you're heading below the January low and probably below the October low. The specter of the Fed not raising rates, believe it or not, is really pressuring the banks. Everyone thought the Fed was going to raise, well, not everyone. Many of thought the Fed was going to raise rates, which was going to increase their margins, and the banks were going to be able to make even more money. That's unlikely anytime soon. So I rate the banks a negative. And finally, in the key sectors, the semiconductors, which I am long, but I sold half my position this week. So I was, and in fact, this looks similar to the Qs anyway. You got, doesn't look awful. Doesn't look as good as the Qs, but doesn't look awful. I sold my position, I believe, on Wednesday. I did sell on Wednesday. So I have half a position left in semis, and I will look to get out of this position this week fully. So I will be out of the semis this week, you know, more than likely. So of our three key sectors, they're kind of rated negative, 2 negatives and a neutral, or 2.5 negatives, however you want to slice it. There's nothing positive there. So indices look to not so good. Sectors don't look so good. The rest of the sectors will go quickly. Software looks awful. Looks like it's going to take out both the December low and the January low in short order, and probably have some tractors selling at least the 200-day moving average. Telecom, which I do think at some point this year is going to become a leader. It just ain't now. Still looks awful. This is probably the second half of the year story where it needs a lot of work technically to repair itself. It doesn't look good. You need some good basing, a good flush out, and then maybe it can begin to take out some of these old highs, but no time soon. Diversified financials. They don't have the banks, and you can't like these either, so it's probably going lower. There's nothing redeeming. You know, the 200-day was tested successfully here, and now you're testing it again, and it looks like you're about to lose the battle right here. Consumer discretionary, while this definitely looks toppy, and I think it was Henry who said, you know, head and shoulders, this certainly has the makings of a head and shoulders. Neckline, shoulder, shoulder, head. Volume is, I don't know if volume would be actually supportive of that, but pattern looks like a head and shoulders. These do not look good. And the subset, the retail sector, which I have liked for a while, and it looks better. I hate, one of my most hated patterns, and I think one of the most dangerous patterns in the market is you make a high, you have a normal decline, and you rally just short of the high and roll over. That the largest declines in the market is what they look like. Peak, decline, healthy, rally that fails, and then they cut them loose. This is what I'm concerned about in retail. Industrials look like the market really. They look sloppy, look like they want to go lower. Materials I don't like at all, and I'm sure you can see why. They look sloppy like the rest. They're just under more pressure. They look like they want to go lower. Nothing really redeeming yet. So we're not seeing any constructive charts. We're not seeing anything that says, yeah, future leadership emerging, things look good. They don't look good right now. XLE, which is energy, just trying to put in the bottom. We talked about it last week. XLE especially is really trying to put in a complex bottom down here. This bears watching very closely this week. I said it last week. It's one sector I would take a shot with a small amount of money to be long. And I am long, as I mentioned for the last. I'm long and wrong, frankly. So you can say I'm early if you want to be polite. I just call it being wrong. Couple of things here on OIH. Thursday's action was really constructive little hammer here that held above this low. Friday's action was the bullish engulfing. If the sector's going to go, it's going to go now. I mean, if this is percolating to get a rally, this week we should be reaching up towards the 50-day moving average. Okay? We should be. We should not roll over right away if the sector's really ready to rally. So I still have a long in OIH. Depending on the action Monday and Tuesday, I may add to it. And let's finish up with defensive sectors. Large cap pharma looks absolutely fine. People are hiding here. If they pull the trap door in the market, this will sell off too, but it looks constructive and healthy. Healthcare I bought this week. I bought on Thursday, actually. I sold some semis and I bought healthcare. It was Wednesday. I can't remember. One of the two days. But I think it looks fine, healthcare. It may sell off with the market, but it's been a leader. So here comes all our leaders now. Healthcare is a leader, not considered an offensive sector, it's defensive. REITs, they've been a leader since October. Again, not considered offensive, but it's a defensive sector. It looks overbought, but still pretty healthy. Hasn't anything wrong yet. Utilities, which I've been long, I am long. A couple of bad, 2 out of the last 2 days were bad, but it still looks healthy. It's been a leader, and it is a leader. So you have REITs, healthcare, utilities. Consumer staples are rolling over. They were a leader. They're weakening a little bit. Fundamentally, they're still very expensive, but these are 4 defensive sectors, and biotech, which is kind of sort of part of healthcare, and I do own full disclosure, remains a leader, and is strong still. So we have no offensive sectors as the leaders, and that's not exactly the healthiest setup. Let me pause for the question. Jason, do you think the banks are taking the hit due to the huge amount of loans they have for oil companies? I don't. I think it's all due to, that's not all. I think the majority is due to the fact that rates are not going up because, frankly, almost all the banks look the same. They all look crummy. And we all know that not every bank has energy exposure. So I think that it's not an oil play. I think it's a Fed play. Gold, which I bought this week. Here's gold and metal. Impressively, gold has rallied. So here's one of the times where people say to me, Paul, you're wrong. Gold and the dollar can never rally together. Oh, yeah? Well, gold's been going up since early November, pretty smartly, frankly. And the dollar's rallied, too, so it most certainly can go up with the dollar. Gold's been strong. Thursday was a really awful day in gold. Daniel says tested 200-day moving average. To me, I don't care about that. He cares more about it than I do. I want to see the action early this week to see if we get a continuation. As most of you guys know, it's been here a while. I hate all red candles. They're a nasty day. I want to see if we get any follow-through selling pressure below this low close. Copper. I said it for 2 months. Smart money has been and is locked and loaded on copper from way back in here. And they're often early, but they're usually right. So I don't think it's time. Well, actually, so if you want to take a shot risk-wise, you'd be long copper right now, and because here's the reversal day to get long. And if it closed at new lows, you get out. This is one you can take to the long side with a very tight stop. The gold miners, I bought. When did I buy? I bought them here on this day, sold some on this day, and I bought some back on Thursday. I think that looks constructed, to me at least, the miners. This looks like a consolidation of this move. And I do believe in the short term that we're going to take out the tie and bust the upside a little bit. What's your stop? You know you're wrong. Meet a close below these lows to get out. Okay. Let me pause and look at the question. One second. GDX. Well, yeah, I don't know if I consider a flag a GDX, but I certainly think it's a consolidation. If you want to call it a flag, Sam, no argument. If you think it's consolidating bullishly, it's going to head higher. Here, Sam, here's what worries me about GDX. It's ugly cousin, GDXJ, the junior miners look like poop. I'd much rather see GDXJ leading. You want to see the junior stocks leading the senior stocks. That's healthier. Okay. Let's see. Edward. I'm trying to understand Edward's question. You showed 20 flavors of vanilla. Where is the contrarian flavors? I don't think there. I'm not sure there are any, quote unquote, contrarian flavors here. I think the market can have no man's land, and I don't think you don't have enough stress, the upside or the downside, to take a shot. The only contrarian play, frankly, I think is oil, which I mentioned already. I think if you have the risk capital, you buck up, you buy OIH or XLE. The stocks are pretty clear. That's probably the only contrarian play on the equity side, and maybe copper on the commodity side would be a contrarian play. So I can't say I agree with you that everything you see is vanilla. Best ETF for copper is, I think it's JJC. I just hate, commodity ETFs are constructed so poorly because of contango that it makes it hard. None of them are constructed well, so you're kind of stuck playing them if you can't play the futures contract. Let's see. And, all right, let's move on. Go on to fixed income. Here are the bonds. I sold my bonds. We talked about this. I bought them and sold them a couple of times of late. Happily, I sold them at the high, and I bought them back lower, and I sold them again at the high. So right now, I am 100% out of bonds. I wish I owned them on Friday, frankly, but I didn't. Again, they're stretched to the upside. Here's the futures contract. It's at all-time high. But unlike stocks, which can go up 10 and 20-fold, the 30-year bond is not going to zero. I don't know a lot, but I can tell you categorically it's not going to zero. TLT, which most of us trade, looks like it's kind of blowing off to the upside here, although I don't believe a bond ever can blow off to the upside. But it looks like it's getting to a point where you're going to see another reversal. I will continue to buy weakness in the bond and sell strength for the foreseeable future. Junk bonds. Here's J&K, which I do own at a very big position in J&K, and here it is on stock charts with the dividends included. In the short term, it's making higher highs and it's making higher lows.
Yeah, but that's a sweet coil right there. I like that little coil right there.
Yeah, a 5-day coil.
Yeah.
But as good as this looks right here, take a step back and you'll realize that you've got serious lower highs and serious lower lows, and you wouldn't be out of line if you said this whole bounce is just a counter trend move from this giant decline. So we're going to find out pretty quickly. Because don't forget, folks, look in here. This is a beautiful coil. We had all these inside days. And I was wrong, because I thought here we were going back up to test old highs. And instead, they cut them loose right away. So, tiny on this looked good, and it looks really good in here. But if they fall out of the downside, you have to get out. You can't stay long. Well, you can, but you'd be wrong and it could be painful. That's fixed income. Let me just pull the AD line while I have it. But here's the one reason why I keep harping the bull market is not over. The AD line just made an all-time high a couple of weeks ago. And there's no divergence yet between the AD line and the Dow and the S&P. So unless we're setting a precedent, which is always possible, the odds favor whatever decline we have, whenever it ends, price is going back to all-time highs. We'll start to get concerned, Tiny and I, when the AD line stops making highs with price. That will be a really worrisome sign. But not yet. Let's go to crude. So here's crude oil from Friday. If you follow me on Twitter or Facebook or get my blog, investfortomorrowblog.com, you will, I spoke about this Friday afternoon. This move came out of nowhere. On a really short-term basis, let's see, a 5-minute chart. Hey, look at this. This is a monster move in the span of, now, not even half hour, 40 minutes. And crude spiked 8% into the close on Friday. 8%. So everyone wants to know what, there was no news either, which is I think is a great thing. I love when there's no news. I've heard that it was just some technical buying because at the end of the month it was an anomaly, blah, blah, blah. I have no idea. I'm not going to even venture a guess. But here's what you should watch. If this really was an end-of-month anomaly because of the short squeeze, then this week this little rally should end and we should go right back to new lows. If crude does not roll over right away, then I would say you have the makings of a short-term rally that may last a little longer. This isn't the first time, but we have multiple divergences. You have multiple divergences in crude. It looks like it wants to go. Again, I have no idea why it rallied Friday, and I don't care why it rallied Friday. You shouldn't care either. It doesn't matter if it was an anomaly or it was real buying, or just keep an eye on price action and ignore the pundits. We'll find out soon enough if the action was real. Okay. Natural gas. Pat, do you have any opinion on crude?
My opinion on crude is that it's very close to a bounce if it hasn't started already, if this isn't the small W in the pattern right now. And, I'm not really in total agreement with you that it's going to go back 50% when it does start. I'm not saying you said it's going to go 50% from here, but you have made statements that when it does finally bottom, it'll go back at least 50% of the decline. Yeah. I don't know about that. Me and you differ on price targets. With oil, I think this is going to be, and maybe I'm just, over exaggerating. Not that I've ever done that, but I think this could be a monumental move in crude that could bring it down to sub $30. I know you don't agree with that, and that's why they make vanilla and strawberry ice cream. But in my humble and very accurate opinion, I think that this could get a nice bounce, and it could be a sucker move, and it could trap a lot of people. And in the end, I feel we have much lower to go on oil. I don't think it's over. I think that a bounce could start here, and I don't believe in your 50% target. But hey, let's see.
My target's based on every 50% decline in crude, wherever it bottomed, led to a 50% rally the following year.
Right, and that's why. I mean, I just, look, I'm a seat of my pants Elliott wave guy. I'm not a true Elliott wave technician, as you know, and it's only because I've never been able to master it. But, I do believe that there is some, how many times have you been sitting next to Charles Payne? A lot. I turn it down. I let Paul handle the Fox News. I don't do Fox News. I only want to go to the World Summits. I don't go to CNBC or Fox News and stuff like that. Anyway, I'm not an Elliott wave guy, as you know, Paul. But I do believe that there is something to be said about impulsive moves, breaking down into 5 waves and all that stuff. I mean, I'm not going to get out my ruler and count everything, but, if you want to look at it that way, then this, in my opinion, is, maybe a 3 of 3, or maybe even just a 1 of 3. I don't know who's Elliott wave people here that can count it for me. But, if it's 3 of 3, and, that means we still have 5 of 3 going. Then we have a long wave 4 correction, right? So if this is 3 of 3, we'll have a 4 of 3, then a 5 of 3 will push us down below $45, probably even below $40. Then we'll get the wave 4, which a lot of people will mistake for a bottom. It will take a very long time to form. And then we'll have one final wave 5, and I think it pushes below $30. That's my opinion. That's my opinion.
So,
But
I don't disagree with you on that, by the way. I think if that's how it shakes out in the downside, I can certainly see that. I'm just saying wherever it bottoms, we're going to get a 50% rally from that point.
Oh, you mean the wave 5 bottom? Yeah, okay, I'll give you that. Maybe we go. Yeah, I misunderstood. I thought you had made the comment that whenever this current decline, not the decline, this current decline ends, which technically could be now, right? I mean, we have a small W, we have a divergence, we have a nice day on Friday. I thought you meant when this decline ended, this leg of the decline. Let me speak better English.
I meant the decline.
Okay. Yeah. Okay. Then I'll give it to you. But I thought you meant this leg of the decline. I don't think we go 50% from here, but it's not out of the question. I just don't believe, I don't believe it. But from the ultimate end of the decline, yeah, 50% is definitely doable. I don't think oil is gonna. And then again, part of me thinks that maybe it does. Maybe I think that maybe the entire there may be a paradigm shift in oil, but of course that's being, you know what kind of person thinks that it's different this time, right? An idiot, right? So I mean, that could be a pretty idiotic statement of mine saying that this time I think it's going to be different. And it's going to be some massive, unbelievable, game-changing move, right? I mean, only idiots think that this time it's different, right? It's all the same. It's all the same. So I don't know.
Jason Gefford, who runs SentimentTrader.com, has made this comment several times, and that is, he keeps saying, energy's getting close to the bottom, getting close to the bottom. How will you know? You'll know because you won't want to buy it.
Right.
I think, so what concerns me in the short term is that guys like me keep going on TV and recommending oil stocks. And when the final bottom hits, no one's going to recommend an oil stock. Just like when the dot-com, I'm not saying oil was ever in a bubble, but when the dot-com bubble burst and all those stocks went to almost zero, at the final bottom, no one recommended the dot-com stock.
Right. Well, they are still, I mean, every day at least on CNBC, I'm watching somebody get rolled out saying, yeah, we're very close to the buy, or, these are value plays at this point, or this is amazing. Yeah, I mean, sure. And unfortunately now, again, you got a very different, um, a different way of communication and media and stuff now than you did back in the biotech bubble and the tech bubble. And I mean, right now, news is so fast, there's barely an edge anymore. So, I mean, there still is if you're the fastest with the news, but I mean, right now you're sitting there and, I mean, all these people are coming out. I guess that won't change, and I guess you're right. As soon as they start saying get away from oil, then maybe you're right. Maybe it'll start to.
I don't think they're going to say get away from oil. I think they're just going to stop talking about it.
Right.
And, right. Just like with gold, no one said that's not fair. People did say, but before gold bottomed the last time, people weren't negative on gold. Nobody wanted to talk about it.
Well, nobody except the gold bugs, right? I mean, you're not gonna.
You can't count gold bugs because they're like insurance salesmen. The solution's always gold.
Right. No, and there are gold bugs going back to, right, the 70s and the 60s. I mean, there are newsletters out there that are printing since the 70s for gold. So it's like, and they're still printing. So I mean, there's always gold bugs. There'll always be gold bugs. I mean, I love all the people after gold, broke 1,000, back in 2000 and whatever it was, and I took all my assets and put it in. I took half my assets and put it in gold. Yeah, sure you did. Sure you bought gold at 250. I'm sure you did. Right? Nobody bought gold at 250. Sorry. Unless they want auto buy it, they kept buying it.
Don't forget that the central bank, the Bank of England, the Bank of England sold gold in mass, a huge quantity at 250 on the way down, and said it's no longer an important asset to us, just as it was reaching its seminal generational low. That's the kind of things you look for where, so last couple of weeks, the Saudi prince, bin Talal, said oil will never be at 100 again. Never. A Saudi prince. So if you read my Twitter and my Facebook and my blog, this is the same guy who in early 2008 doubled down on Citibank, and then he tripled down on Citibank, and then right before the bottom fell out in September of 2008, he quadrupled down on Citibank. So all of a sudden, he's supposed to be an expert on oil and on investing. Oil's never going to hit 100 again. I would bet my kids, my house, my cars, my future earnings, I'm going to see oil at $100 again. All right, let me go on. Oops, just get my window. What's that? So back to natty gas. So let's take a little closer look. So on Thursday, it poked out of the bottom. You had a little hammer on Friday, and you have a divergence developing. So actually, I forgot to ask you earlier. You said there are no contrarian. Well, maybe I said there are no contrarian plays. This is another one, which is you're getting at a contrarian column. So if you continue to want to take stabs at stuff that's fallen out of bed, you look for a reversal, a hammer. You look for your stochastic, not confirming the low. You buy a little bit of natty gas right now, and you have a tiny little risk point. Closing below this low, you get out, get a little nick, and wait again. So now you've got, I can't forget, but I mentioned oil, I mentioned natty gas, and copper. All are kind of contrarian plays. And speaking of contrarian plays, you could certainly call the euro one of them. I've said this since, I don't know, November maybe, October. Smart money has been heavily long the euro this whole move down. The smart money looks pretty dumb. As you know, I've been long the dollar forever. I'm a long-term mega bull going on my 6th, 7th year. The dollar is going to put in a short-term peak. Whether this is a coil, Heidi, you can talk about it if you want. Whether this is a coil and we've got one more move to the upside before a decent pullback, or we have a failing rally, I don't know. But the whole world, I know when guys like me who never talk about the dollar are all of a sudden talking about buying it now, you're towards the end of at least the sort of intermediate term move. So whether the dollar has one more gas to the upside and then pokes down, we'll see. But if the dollar gets weaker, you can bet the euro is going to rally. And at some point, the euro is going to rally, 5%. It's so decimated. Folks, just like the yen did, kind of like this. The yen got decimated, had a really nice rally, huge rally for the currency, and then fell out of bed again. I still hate the yen. I think it's going to go down 50% from here. I think you can still short any rally in the yen. If you have the long-term staying power, you're going to make a lot of money being short the yen. Let me just go back up on top for a second, and then I'll turn it over to Tiny. Oops. I'm going to try to miss any questions. Here we go. Thank you, Henry. Yes, we agree that the yen is a euro is a contrarian play. Somebody mentioned SCCO for copper. SSCO is a stock, so it doesn't totally move with the commodity. You got to be careful there. It's like if you like oil, you only go trade Exxon. It doesn't always move with the commodity. Let's see what else. J&K, I covered, Edward. DVC. Yeah, I definitely watched. I actually watched GSG. But DVC is essentially the same thing. There's different weightings to energy. And frankly, it looks like oil. So there's a lot riding in the short term. This week is put up or shut up in the commodity space for the bulls. They got a snapback on Friday. They got to do something with it. And you would think that if commodities are going to rally, the dollar is going to go down. Doesn't have to, but you would think to get a good tailwind for commodities, the dollar's going to pull back. J&K going to break out. Yeah, I hope. Sam, I'm long it, so I don't need more money to buy it with that portion of my portfolio, so I want to see J&K go. We covered for Edward. Anti-Shostain, that's fun. Thoughts on supplying demand, huge supply, I think it's yeah, Jason, we talked about this in prior weeks that I think the Saudis finally got their act together and agreed to lose a lot of money in the short term by flooding the oil market so they can punish Iran, destroy Russia, and then also hurt our fracking and shale market. So Saudis are doing, economically, if the Saudis were a company, they're trying to run their competitors out of business. Let's see. Natural gas is covered. Dollar shows Joanna. Yeah, I agree, Joanna. The dollar, just be careful, folks. I talk about divergences a lot, and so does Tiny. But look at how many divergences in DVC you saw all the way down.
Yeah, they get strong trends run divergences over. So you can't go completely on divergences. They're fine to trade. They're great. I'm not against them, but you better make sure your stop is set. You got to get a reaction off that divergence, or you got to get the heck out. Period. The end. That's it. You could trade them, and they're great, and you have to lean against something, but you get out if it's not working. You can't mess around. You can't sit there and go, but it's a divergence and it's the stochastics. George Lane was a genius. Well, the guys from
I mean, even if price test the 200-day moving average and you have a hammer and a divergence, you can take the trade. But when it's time to get out, if you're proven wrong, don't be like those pompous guys and say, I'm not wrong, I'm early. Recognize you're wrong, take your little loss, and live to fight another day.
right, and because here's the deal, right? You don't have to say you're not wrong, you're early. You're definitely early. It's not ready to turn yet. You know you're early. That's the truth. But you better also know you're wrong. But you could say you're early, but say it after you get out. Ah, man, I must be early. Because you're definitely early. You're right. You're absolutely right. But you're also wrong. And you better get out, you know.
Edward, regarding your question on the Greek elections, so far the new Greek government has opened their mouth like kind of like a child, or a monkey beating its chest. Whether they like it or not, Greece is still beholden to the markets, and they can say all they want. And frankly, the new prime minister, in my opinion, is an idiot, because even though he wants to leave the euro and kill Greece's economy by declaring the re-independence, they need the markets more than the markets need them. So I think he's playing the whole thing wrong. Back in my mind, I wonder if it's an act, a post-election act, and then he's going to come around and realize that the depression that Greece has been living will be kind of nothing compared to what's coming up if they leave the euro. If they leave the euro in default, no one will loan them money again for the next probably 5 years, and they're going to have to print drachmas, and then you'll have go from total deflation, depression to hyperinflation. Destroy your economy for a decade or a generation. So I think if they do that, they're a bunch of idiots, to put it kind of childishly. If you're an ETF specifically on oil and natural gas transport, Jason, is there an ETF on just the stocks that transport oil and natural gas? I mean, kind of, sort of, it's the MLP ETFs. I own this one. AMJ, which is a basket of master limited partnerships. Most of the master limited partnerships are midstream energy companies. They carry natural gas and they carry oil. But you got to do your homework on these. This is a big one. There's a couple more that you can Google. Let's see. You guys have made me want to watch the Odd Couple. Hey, that means I must be Oscar and Tiny Felix, Scott. Scott, I know. Scott, trust me, I know where you were going. Any other questions or comments before Oscar comes on?
Guys, there's no Oscar today. I got to run, unfortunately. So we're just going to do this part of it unless you want to stick around and take questions, Paul.
Man, stop at your evaluator.
All right. Yeah, I can. I got to go. My friend came down from Connecticut to see me. So I actually have two friends in Connecticut, and one of them isn't Paul. So.
Wait, besides me, I really had any friends.
How about Debbie?
She can't have visit you?
No, yeah, right. She wouldn't visit me if I was next door to her. If I was visiting somebody her next door neighbor, she wouldn't come and see me. But she's one of my friends in Connecticut. No, my friend John. My friend John, he's down here. So he's a guy from East. Well, where does the GE guy live? Eastport?
Who, Jack Welch?
Yeah.
He was in Fairfield and Saskatoon Hill. I thought he moved.
All right, whatever. This guy lives in Westport. He doesn't live in Eastport. He lives in Westport. So, maybe Palm Beach, but no, I mean in Connecticut, Aiden. All right, guys. Thanks a lot.
Yep, everybody.